Hello and welcome to this live stream on Money Control, the closing bell with me, Yatin Mota. Obviously, if you talk about the Indian stock markets, they have been quite volatile for the past, 1 week or so. When it comes to the markets today, also we had an intraday up and down movement. Finally, however, post the HDFC Bank results, markets sought some kind of support at low levels, led by a performance in the IT banking stocks. We had the markets which probably managed to stabilize themselves almost 130 points higher. In fact, today's close on the Nifty was close to 23,150, psychologically a good mark. And when it comes to the Sensex, we had almost a 600-point rally coming in. However, the sell-off in the mid-cap stocks continues. The mid-cap index on the NSE was down nearly 700 points, almost 1.5% cut coming in there. The small-cap index also fell by similar means of 1.5%. Advanced decline ratio in the market was 1:3. So, despite the markets trading in the green, we had the mid-caps and the broader markets clearly under pressure. Sectorally, IT, pharma and obviously financial services stocks led the markets. However, real estate, media and energy stocks continue to remain under pressure. Now, if you talk about the Nifty 50 stocks, we have the IT stocks like Wipro, TCS, Infosys, Tech Mahindra rallying anywhere between 2 to 3%. So, the IT stocks clearly helping the market gain momentum, and also HDFC Bank post the numbers gained by nearly 1.5%. So, that was the savior of the day. On the losing side, we have stocks like Tata Motors, Power Grid, Trent correcting from the recent highs. Today, all of these stocks were down anywhere between 1.5–2%. So, clearly the market continues to remain under pressure. No leadership coming in from an ICICI Bank or a Reliance. So, all of these stocks were slightly on the sideways today. On the show today, we have Ashish Bahety, one of the renowned technical analysts in the country. Ashish, good afternoon and welcome to the show. When it comes to the markets, a very difficult market to trade, a lot of shorting opportunities in the market, but, a lot of result reaction have seen a gap down open. How do you really trade the market, especially the index and FNO stocks?
Hi, good afternoon, Yatin. Market has been fairly, I'll say, up to its mark. Now, gone those days where we'll see a bad earning and yet the stock performing. The market has been very clear on its message that if the earnings is not matching up with the price momentum, there will be a sell-off and there will be a huge profit taking. And only those stocks are getting corrected, which we have seen in 2023 and 24, seen a massive run up. And those stocks we are seeing a continuously profit taking in those stocks. So yes, market has been tough to trade, but however, we are getting good shorting opportunities. Nifty is still sell on rise until unless it doesn't cross its 23,400 mark. Till that point, it's still a sell on rise. Now the thing is, 20 time is also very close, is getting slowed down. So there's that respite is there, and the way market recovered today during the intraday, that has been is a little impressive, specific to Bank Nifty, where we have seen a good rally of almost Bank Nifty corrected during the intraday till almost to the level of 48,000 odd level. And from there, it saw a correction, a recovery of almost 600 to 700 points. So that is good. I think following week, we might see Bank Nifty inching up a little higher to 49,400 odd level in the coming week. Yeah.
So, clearly the market continues to languish, and earnings haven't been so impressive in the third quarter so far. But Ashish, for the past 2-3 trading sessions, I have been witnessing the new age stocks or the market favorite stocks clearly giving up a lot of gains. We saw Zomato falling almost 15–16% post numbers. Dixon Technologies, a intraday loss of 15% post the numbers. We also have stocks like Paytm, stocks like Kalyan Jewellers clearly losing the momentum game. So, when it comes to all of these new age stocks or probably momentum boys, do you think there is further downside in all of these names?
Yeah, many of them may even correct further from here, specifically stocks like Dixon, which have rallied, gave a absolutely phenomenal return in 2024 and 23. I think Dixon may even correct a little more further and may touch even 13,500 mark. So another 1,000 or 1,200 point fall can come in Dixon. Zomato, I think it did a fairly well recovery during the intraday trade session today. So it might consolidate And the base, I think it will try to find it's a base near 200 zone, which is a good support zone. Even during the last rally, it started rallying from once it gave a breakout of above 200. So that becomes a good support zone. And I think market today also we've seen that from 203, Zomato recovered and closed near 216. So I am hopeful that 200 will act as a good support for Zomato. For Dixon, I think 13,500 will act as a support.
Okay, so that's the view coming in on new age stocks like Zomato and Nixon, who have been probably the market darlings for the past few quarters, and probably support for Zomato close to 200 as per Ashish Bahety. But talking about the stocks in focus today, ICICI Pru reported their numbers. This insurance company missed the value of new business margins as well as the absolute number from the brokerage point of view. Today we have Morgan Stanley, which is equal weight on the stock with a target of 695, and they have also trimmed the earnings estimates, especially on the value of new business, by nearly 2 percentage points. And they believe that the volatile history, weaker margins, and the kind of up and down that we have seen in the overall earnings forecast will impact the company's performance in the near term. Today the stock of ICICI Pru fell by nearly 6% in trade, and clearly it was one of the top losers in the F&O market. Ashish, talking about insurance companies, SBI Life, ICICI Pru, HDFC Life for that matter, these stocks have seen a lot of volatility. Any particular life insurance company or insurance company that you like, and in particular any view on ICICI Pru after today's fall?
Yeah. So, Yatin, market is giving a clear verdict. We have seen in the numbers of HDFC Life, company posted good numbers and market reacted positively for that, and stock went, I think, that particular day up to 10%. Similarly, today, ICICI Pru posted a bad numbers and market corrected it by 6%. And during the intraday, I think it fell to 573 level. So here, I think there's more shorting opportunity available. Any pullback can be used as a shorting opportunity in ICICI Pru. However, if somebody has to buy, I think HDFC Life is a good pick, or is a preferred pick for us during this time. Stock is corrected to 20 DEMA right now, and today it also fell by 1%, but I think it's finding its support near 600 zone. So one can go long in HDFC Life by keeping a stop loss of 605. We are seeing a potential of or a target of 640 we are seeing on the charts.
Okay, 640 is the target, and around the 600 level, HDFC Life, taking that long position makes sense in the insurance space. But another accident of the day was IndiaMart for the day. Nomura downgraded the stock today and cut the target to a level of 1900, which was earlier 3150. So a steep, target cut in IndiaMart. The internal data was quite bad. In fact, paying subscriber, that number reduced on a year-on-year basis, and the subscriber addition was also quite muted for the quarter, according to brokerages. Now the stock fell almost 10% intraday trade, settled low by nearly 7% in trade. Ashish, would like your views on IndiaMart at 2150. Do you think this stock would probably find support in the short term, or do you think there could be more downside coming in for the stock?
It looks difficult because the stock has been continuously under pressure. I think even in 2021, somewhere stock made a high of 4,800, and after that we have hardly seen any good rallies in stock. Stock has been hovering near 200 DEMA on the upside, but once it always breaks the 200 DEMA, the downside is getting opened for at least 10 to 15% from 200 DEMA. So currently stock is trading almost 200 DEMA is placed at 2650 zone. And stock is already at 2100. So we may see another downside till 2020 level. But however, any pullback can be used as a shorting opportunity for India Nivesh. We don't suggest any shorting at this level. So any pullback can be used as a shorting opportunity. However, keep a stop loss. Any short, please keep a stop loss of 2200.
Absolutely. So no probable shorting opportunities, but yes, the stock can go down as low as 2020 in case you have short positions in the F&O market. But Ashish, one particular trend in the market is that there hasn't been leadership. Reliance, that stock trades on a very sideways move. Earnings were also not that great versus the expectations for the last 2 quarters. Numbers have been range bound. There are hopes of unlocking. That hasn't happened yet. However, the street places a target price much higher than the current market price. We have banks which haven't done much in terms of earnings, but HDFC Bank numbers were in line with estimates. The stock gained only 1%. The momentum in IT stocks clearly is missing. Last 2-3 quarters, IT stocks provided some leadership, but now even TCS, Infosys haven't done much in terms of earnings and haven't been able to cheer the street. So, in absence of leadership from stocks like Reliance, banks, or probably IT stocks, where do you see the markets going? In case there were to be a bounce ahead of the budget, what are the sectors to watch out for? What is the trend that you're spotting in all of these stocks?
It will be very difficult for market to take a rally when these large caps are not performing. And I honestly, Yatin, I don't have a very high hopes with the budget. I don't think government has any legroom to do anything in the budget. Being considering it as the first budget for Modi 3.0, I don't think they're going to do much because any which ways the direct taxpayer numbers is pretty low in India. So the people who are paying, I think
Right.
more than 50 lakh, reporting more than 50 lakh income is hardly 10 lakh people, or a million people is reporting more than 50 lakh as their income. So there's not much legroom, and any which ways GST is not part of the budget. So I think budget will not going to have a significant impact on the market. Government cannot do anything on the deficit because we've already seen 2021 they changed their deficit numbers. So, and corporate tax was changed in 2019 itself. So, however, I think from here, government market needs earnings as a trigger point. Unless these large caps won't show good earning numbers, we might not see any fresh highs.
I haven't seen much of a pre-budget rally that we used to. A whole host of these PSU stocks, defense stocks, from BHEL to HAL to a whole host of these railway stocks used to do well. Ashish, for the mid cap index or probably for PSU stocks, do you think there can be a comeback in the market, or probably all of these stocks or all of these indices, the mid cap index or the PSU index has made a top, and probably from here on to recoup back to those new highs will be difficult?
Yes, most of the PSUs have made a top, and it will be very difficult for them to regain or recommand the old price what they or what the premium they were commanding in 2023 and 24. However, selective PSU and selective PSU banks are looking good. We are more bullish on the PSU banks. They have seen much better performance compared to large cap banks, and how stock like SBI and Bank of Baroda remains our top pick in the PSU sector. So we are more bullish on the PSU banks. However, on the PSU companies, we are just bullish on HAL on the defense side.
So SBI, Bank of Baroda, and HAL, these are the top picks, coming in from the PSU pack, and probably a lot of these railway stocks have seen a big correction from the recent tops. Before we let you go, Ashish, one final question on the market setup. I have been hearing from a lot of these technical analysts that the few index, especially Nifty 50 has made a death crossover. Probably, a lot of stocks in the Nifty 50, almost 2/3 of them are below that 200-day moving average. Technically, what are the support zones one should look at, and what could be the, medium term kind of resistance that you see on the markets, because traders are losing money both ways, a lot of confusion in the market. So, from the setup point of view, what would be the key support that you see for, a mid cap index or, Nifty 50, and what would be the resistance level that one needs to watch out for?
Yeah. So for see, now already we have seen VIX above 17. So there will be a lot of volatility in the market. Today VIX cooled off a little bit, but however,
Correct.
on the support side, I think 23,000 is a sacrosanct level. If that gets broken, we may market may open up its face for 22,500 also. So 2,300 is a level which one should keenly watch. Even today, it defended that level. However, on the upside, I think 23,500 or 23,550 is a zone for Nifty where we'll see a lot of resistance crossing that. But however, if that crosses, we may see a rally till it's 200 DEMA, that is 24,000 level.
So 23,500, a probable short-term resistance, post which a 24,000 kind of a level is possible, which is the 200-day moving average. Pleasure as always talking to you, Ashish, on the show, and thank you so much for joining us today.
Thank you, Yatin.
So that was the view coming in from Ashish Bahety. On the technical side, things doesn't look that great. A lot of momentum is lost in the market. Let's hope there is something in the budget to cheer for the markets. At least the event on the global side with Trump swearing in is gone and is behind us. With earnings taking over tomorrow, we have companies like United Spirits, HUL, companies like Ultratech Cement that would report numbers. So a lot of results to watch out for, and for that exact analysis, stay tuned to Money Control and also for your other business news. Thank you so much for watching. We'll see you tomorrow morning on the opening bell.